Hi, just to check, y'all can hear me?
Yep, was good.
Hey, thanks, yeah, I still on the way back. So essentially, this month we are giving updates on Apple because last one the quarterly update was the start of February, and yeah, obviously time has passed. So of the earnings, overall on a year-on-year basis, Apple's earnings have actually improved with greater profitability and improved revenues across all segments. But over the last quarter, uh, most of Apple's segments produce better growth, such as Google Cloud, as well as other apps. But the most important one, which is Google search advertising, was actually very been affected by reduced advertising spending. Which is why there is
Sorry, it's a bit funky. Maybe you can like adjust the earpiece a bit. Sorry.
it's not that.
Okay. Yeah.
Hello?
Try say a sentence.
Like that.
No, it's still quite muffled.
Shit, like that.
Still pretty
Maybe
muffled.
we move on to team two first, then we come back to team one. Is that okay, Chisel?
5 minutes.
Wow, it's getting worse, bro. I cannot hear. Okay.
Hi, I'm Joseph. If Jisung, if your mic can't hear properly, maybe I can just share.
Okay, he's fine with it. Yeah.
Okay, cool. Can you guys hear me clearly?
Yep, can hear clearly.
Okay, thanks. Yeah, so we're just gonna do a brief overview of Alphabet since the last 1 month. So firstly, the 4Q earnings have just come out. So there was a further Google advertising spend year-on-year increase. And we also saw the Google Cloud revenue jump. Yeah, I think the most important thing that we really saw was the monetization of YouTube Shorts. And I think this will begin rolling out. And I mean, we can see how the influence of TikTok has, gained increased mind share. So hopefully with the YouTube Short monetization as well, hopefully it will bring apart quite a big revenue stream for Google on top of this. Yeah. And I think the thing that is really on top of our minds and that has really hindered us from adding to our position, even though it's currently below our cost basis, is really the rise of ChatGPT as well as OpenAI. Yeah, I mean ChatGPT recently, OpenAI slash ChatGPT, recently received funding from Microsoft, and I believe that this will aid their further expansion in the entire cloud AI space. And on top of this, I think we have seen ChatGPT start to roll out some premium features such as I think you need to pay to subscribe. So I think this is something that we still need to look into as it could potentially open up a new opportunity for Google in the sense that, if ChatGPT and OpenAI, if they need to, collect subscriptions in order to scale this because maybe they don't have as much funding or revenue at the moment, then it could open up an opportunity for Google to jump into the space. And when they eventually release their own AI search engine, they could potentially bring back some of the market share back to Google. Yeah. But I think all these are still really in the early stages. And it's really hard for us to ascertain whether Google or ChatGPT or any other new competitor will really win the market. And I think we really believe this is like a kind of a winner takes all market. So we are treading really carefully here. And that's why we are still kind of conservative on adding onto our Google position. Yeah. Yeah, and this is just some of our statistics regarding Google and yeah. And for Helion, we actually gave an update, actually sort of a initiation of an idea last month. But I think we've decided to just stop covering it and stop following up for the moment. just because we see opportunities elsewhere. I think China Tech has retraced quite sharply in the past 2 weeks. And earlier in the year, we were thinking of actually initiating a position in either Baba or JD. Yeah, so we are gonna revisit that idea and hopefully initiate new positions as the market is down. Yeah. If you guys have any questions, we can answer them. Thank you.
Can I check regarding like your YouTube shorts, right? So you said that it's unlikely to impact on revenue. Like what do you mean by that?
Sorry, I couldn't hear it. Sorry.
Right, like in terms of your YouTube shorts,
Yeah.
yeah. So like what do you mean by unlikely to have an impact on revenue?
Oh, it's likely to have it. Sorry, I said it's likely to have an impact on revenue. Yeah. So
Oh,
right now, YouTube Shorts isn't really monetized. So you don't really, when you scroll YouTube Shorts, you don't really see much advertisements in comparison to when you, let's say, watch like normal YouTube videos.
Yeah, right.
Yeah, and I think this was really like the key to this was I mean the management probably wanted to just gain traction of YouTube Shorts first, and allow like ease of usage. But right now, as YouTube Shorts is starting to gain like increasing momentum as well as more like more eye minutes on YouTube Shorts, then I think they're starting to roll out this, and yeah, even with this, as creators get like a share of the Shorts advertising revenue, it could potentially incentivize more creators to like come on board, because I think TikTok doesn't really pay their creators very well as well. Yeah.
Right. So you're suggesting that Alphabet could provide advertisement, is it, in terms of this platform picture? Because right now it's not at that point yet.
Yeah, you'll definitely benefit from this.
Okay. So like the management has said something like they wanted to do that to monetize it.
Yeah, it's really been outlined already, and I think I think if I'm not wrong, it's started to roll out already, but I think it'll be fully rolled out by the end, like throughout this entire year. Yeah.
Okay, got it. Then I think another question is just to check like the percentage of a portfolio, like how much is it Alphabet now?
It's about 10%.
10%, okay. Because just want to check like if within next month will you guys be initiating more positions, because I think this is for all teams as well, because I think by March 31st it's best to have your position allocation by 50%. If not, like your portfolio would be wiped in half. We want to use our cash more wisely. And I know that your team wanted the whole cash from last year, and I think it has paid off quite well. So just want to check on the color whether you guys want to add more positions within the next month.
Yeah, we definitely will.
Okay, thank you.
Thank
Does
you.
anyone have other questions? Okay, if not, I think we can move on to team 2.
Okay, let me share my screen. Is my screen visible?
Yep, it's visible.
Okay, thanks. Can you guys still see it? I think it's
No, I think we had the same issue the previous time. I think have to share without the full screen.
Yeah, okay. Thanks. Yeah. Okay, yeah. So for Team Alice, basically now, as of last closing, Meta's price was at 170. I just wanted to show the previous 2 months to show actually how Meta has been increasing. I believe even within the month of February, it rallied all the way up until about 180 plus, and then it dropped back down to 170. But I think Meta has been having quite a good year so far in terms of the past 2 months. Yep, so we're approximately at about 21% loss. So updates on Meta is that actually the last round, I think everyone's aware that they have been having a lot of job cuts, and they have released that they will be increasing the amount of job cuts, surprisingly, even though people thought that they were going to stop. And I think it's more than just cutting the cutting jobs per se. I think they're trying to flatten the hierarchy within Meta as well. So the point about how they're going to reduce levels of management between the CEO and company's interns. And yeah, so they're also looking forward to essentially just slashing some projects and jobs along the way as well. I think this is in efforts to reduce their costs significantly due to the overhiring during the COVID period. And for lawsuits wise, I believe I think a few months ago, I talked about how there was this lawsuit by the FTC against Meta. So this was more towards antitrust. They're trying to stop Meta from buying Within Unlimited, which is a fitness VR sort of app thing that Meta was trying to purchase. And they recently said on Friday, so just a few days ago, that it was going to stop its lawsuit against Meta. So this is good news for them. Yeah, and for new tech wise, I think in the rise of like Chat GPT and Google's AI, their Meta is actually trying to release a new large language model based off of AI. And Mark Zuckerberg actually just posted this 2 days ago as well on Friday. So they're trying to join the AI race. And then for SoFi Tech, last month, I mentioned that our target was about $4.50 per share. It did not hit this price during the month of February, but I'm thinking that perhaps you want to lock in at about $5.45 per share, because SoFi has really been on the rise. And I think there was one point it hit about $8 plus within this month as well. So I think it'll be good to hold for the long run. Yeah, so I think at about $5.45, we might want to lock this price in. And yeah, just an update on SoFi is that this is a niche that they've carved out for themselves. And I think so far with the Fed hiking up interest rates again, I think this might lead to certain instabilities within SoFi, because yeah, like their main niche is for student loan financing, so this might affect them. But then on Jan 30th, so quite recently, even though the S&P slid about 1.3%, their stock rallied at 12.46%, finishing at $6.68, which is quite impressive. And this was mainly due to their Q4 results, where their net revenue rose 60% year over year to about $456 million, which beat Wall Street's estimate. Yep, so I think we haven't really given up hope on SoFi. I think it's just more of a price issue right now that we would probably want to invest some capital in. Yep, so that's it for Team Alice's update.
Thank you. Does anyone have any questions?
I actually have some questions. Sorry, Grace, could you bring back to the slide?
Okay, sorry. Yep.
So regarding like SoFi, what I remember was that Joe Biden had said something about they want to do some student loan forgiveness thing. Has affected SoFi business quite a bit. So in here you said that, what do you mean by carve out a niche in student financing? Just want to check. Or is it like they're trying to pivot away this strategy, the business model, to more of a one-stop shop kind of?
I think, as in, I feel like the loan forgiveness thing, what do you mean by, as in you're trying to say that this loan forgiveness thing that he's trying to propose, you think that is going to affect their business, or?
Like it has already been done. Like from what I remembered, correct me if I'm wrong. Like so what happened was that, so basically SoFi, their main original business model is to provide student loans to students, right? So at an interest rate. But then with student loan forgiveness coming into place means that these students don't even need to have loans in the first place, per se. So that affected SoFi in a certain way, but in some way the management has pivoted the strategy to other places, and that's why you can see their stock rallied for a while, which you have mentioned also. So yeah, just want to check what do you mean by that sentence.
Strategy.
Yes, carve out a niche in the financing.
Oh, I see.
Like, yeah.
Or when I wrote this, I felt like I wasn't aware that they were going to pivot their strategy so much, but I felt that and I wasn't aware that the loan forgiveness had been put in place for, as in the loan forgiveness is for every single student, no way, right?
Yeah, no, we're trying to check. Yeah. But just
I
want
mean,
to ask, yeah.
yeah. But yeah, as in, I mean, what you mentioned for sure. I mean, if really the loan forgiveness is for every undergraduate, which I don't think is the case, I think SoFi still has a niche in this because yeah, but as for the pivoting of strategy, I probably have to look more into where they were pivoting to. Yeah.
Okay, then maybe another question is the share price thing. Right?
Mm.
You go to the slide. Yeah. So this one, so you want to wait until 450 then lock in. Oh, or 545. Okay,
Yeah, because I
I
think for
see.
me probably
Yeah.
it's probably too low already.
Okay, got it. Yeah, that's all. Thank you.
Problem. Thanks.
Sorry, can I just add a bit more on Grace's point, right? So yeah, it's true that they have diversified their business around. So far actually is quite interesting because they just based on loans at the start, but because they started adding on different products such as like your housing loans, and other kind of loans, right? So it's not so concentrated on one specific segment anymore. And then if I'm not wrong, they also have, is that them? I think that's them. Yeah, they actually got a new banking sort of like charter, so that allows them to diversify the products. Right, they are able to hold funds like a bank and put in investments like a bank. So that's why it's actually a very we see it as a very high potential sort of like stock in the future. Yeah.
Got it. Anyone has any other questions? If not, we can move to team 3.
Okay, let me share my screen. Yep. So this is our portfolio update for this month. Currently our portfolio is down 5.7% since inception. Right, so a couple of updates for our current holdings. Yeah, so the names in our portfolio, there's no change. So for Daco, in the past week we see that polysilicon spot prices has actually rebounded by 31% from the slump between the end December to mid-January, and prices are now between USD 32 to 35 per kg. And this actually parallels the seasonally like lower demand characteristic of the Lunar New Year period in previous years. And this is actually like corrected as the wafer manufacturers return to higher operation rates to handle downstream orders. And in the short term, we see that there's no new supply coming online yet, and demand is proving to be very robust as the downstream like wafer producers also raising prices. For instance, Longi in the past week, and we maintain a positive like outlook going into their earnings in the next week. And yeah, we have confidence in the management guidance that the current spot prices will last through 2023, where the first wave of capacity expansion in the industry is projected to come online. Then for Adobe, the shares actually slipped this past week. There's a lot of selling pressure due to a report that came out that the DOJ was planning to file a lawsuit seeking to block the Figma acquisition. But this was already expected, and the management is still confident of closing the transaction by year end. And yeah, currently talking to regulators in US, UK, and EU markets. Yeah, for GDS Holdings, yeah, we wanted to sell half our stake at I think $7, but unfortunately the sell that didn't go through because it only hit like 26.7 or something during the week. Yeah, but shares did in line with the retracement of Hang Seng Index, and I think during these 2 weeks there was also a report by cybersecurity research firm citing how hackers got hold of login credentials for customer support services for GDS Holdings as well as ST Telemedia, which is another Singapore telecom company. But this kind of old news as GDS said in a statement that their customer support website was breached way back in 2021, and basically the hackers sold the credentials more than a year after in the dark web in this last month, even though the hack occurred years prior. But the applications that were targeted by hackers is mainly limited in scope and information to like non-critical service functions, such as like ticketing requests, scheduling delivery of equipment, etc. And so the prior breach in 2021 has already been investigated by GDS management. So at current price level, they're trading at price to book of 1. So we'll continue to hold, and if there's any rebound, we might seek to unload some shares consistent with last month's update. So for American Waterworks, they released their Q4 and full year earnings last week. Both revenue and EPS came in line with expectations, 0.5% and 1% positive surprises respectively. So in the full year, EPS grew 6.1%, excluding the sale of the unregulated water business last year. And they also reaffirmed this year's EPS guidance of between 4.7 to 4.82 per share. For the net income of their regulated business also grew 3.2% year over year. And this was mainly driven by continued rate hikes in their regulated businesses, in which they completed general rate cases in a couple of states. So for additional commentary, they said that the chemical costs were stabilizing, so inflationary pressures would not be as rampant going ahead. But I think the selling pressure was affected by the announcement of 2 billion equity issue, which was already previously announced, but they said that the bulk of it will be completed in this year. And the remaining parked to the end of the 2023 to 2027 timeline. Okay, I think that's all for update this month. Thanks.
I think so. Just a quick question regarding GDS. In terms of data breaches that occurred in 2021, did the management also state what are some of the things that they are doing to increase their security protocols?
I think so it was quite data. I'm not sure about back in 2021, but said that the issue was rectified. They didn't give a lot of color as to the specific measures that were implemented. But the reassurance they said was that basically a data breach concerned the client support website logins, which are not that consequential because the physical verification still has to occur if they want to get access to the client servers, etc., hosted within their data centers, right? Yeah.
Got it. Okay, thank you. Does anyone else have any other questions? Okay, then we can move on to team 4. Thank you, team 3.
Thanks.
Let me share my screen. Can you see my screen?
Yeah, can see.
Yeah, so I think Jinja covered
a bit of what I want to cover today, because I think for our team last year, we took a look at Daco, New Energy. So this is more of a recap because we are thinking of buying the stock in the upcoming week. So it's really more of a recap because the last time around, I think we went into quite a bit of details already. Maybe before I start, a bit of update on the Unity, their earnings report for last year's Q4 was out. So I think revenue-wise, for both their grow and operate and create segments were both increased. However, the stocks did drop. The share price did drop right after, mainly because of the loss per share. So based on our reading and sort of understanding, I think the main reason is because of the macroeconomics, where there were questions about whether the gaming and advertisement market will continue, because that is the bulk of Unity's revenue stream right now, which is the gaming market as well as advertising as their main revenue stream. So I don't think it's really about the business per se in terms of Unity as the fundamentals of Unity, but it's more about the macroeconomics today, where we see overall advertising revenue drops. So the challenge for Unity is, I think one, whether it could wear this period out, and also previously we shared that they are looking into other expanding their real-time 3D technology to other markets besides gaming. So for example, automotive and architecture. So the question is how soon they can operate that. Okay, so I think that's on Unity. So I'll quickly go through Daco. So I think Jinja also helped to give an intro to Daco just now. It's one of the global leaders when it comes to polysilicon manufacturing. So polysilicon manufacturing, a background, it's one of the most crucial raw materials for the solar PV manufacturing. And so we think it's it is well positioned in an industry which is high growth and will be increasingly important as we move towards a net zero world. Currently, it has approximately 13% of the global market share when it comes to high purity polysilicon. So if you look at the financials, I think from a financial perspective, the balance sheet is pretty strong. The sales volume has been growing year on year, and in fact, the cash position, including their short-term receivables, I think it's around 4 billion. So they have a lot of cash to operate with, and not much debt. I don't think they have any debt at all, like operating debt. So from a perspective, so in full year of 2022, they produced about 130K to 132K MT. I say estimation because their report is only going to come out 2 days later, but this is what they have announced previously. And I think last year in October, they also announced that one of the bigger contracts that came in, which is essentially a 5-year contract with Shuangliang Eco Energy, a Chinese polysilicon wafer producer, i.e. the downstream of the supply chain. So this is essentially a sort of pre-order for that kind of capacity, and Daco is building up more capacity, not just in Xinjiang, where it used to have majority of the volume production, but also in Inner Mongolia. So their estimation is to expand the annual production to about like 305K MT by end of 2023. So we see that as a good kind of growth potential for the company. In terms of ESG analysis, we mark it as a low to medium ESG risk. So from environmental perspective, I think naturally its product contributes to the whole renewable energy trend in the net zero world. In terms of internally, at least from the ESG report, there were efforts to show that they are trying to reduce the greenhouse gases through their own activities, as well as how they have a supply chain assurance kind of system where they try to assess the suppliers' management performance and then their own suppliers' ESG sort of like qualifications. So so we think on the environmental side, I think they are making some decent effort. Governance-wise, there's also a clear board structure to ensure checks and balance, including a ESG governance structure. So I think the main risk that everyone talks about, and honestly, it's not just Daco, but also other major Chinese polysilicon kind of players, is the controversy over their labor force in Xinjiang. I don't think I have to belabor the point about the kind of controversies that Xinjiang is currently involved in. So because of that, Daco Xinjiang subsidiary is in the US entity list. So it doesn't affect Daco from exporting their products to Western markets, but I think it's more about what kind of business or partnerships they can do with the American companies. I think a noteworthy point is also how one of their subsidiaries, Xinjiang Daco New Energy Co., is listed on the STAR market in Shanghai Stock Exchange. So we expect that such a listing might provide greater information in terms of disclosure to provide more transparency and regulatory scrutiny over actual labor use in Xinjiang. So other risks that we foresee Daco having, I think one is there's a drop in earnings this year due to weakening polysilicon prices, which is really because of the supply increasing in the market. I think for previous years, because of supply chain shock, there was some polysilicon prices shot up quite a bit. But with the reopening and the stabilization of supply chain, we expect more polysilicon supply in the market. But from a long-term perspective, I think our team don't think it will be a major risk, just because we expect the solar energy market to continue growing, and this will be a global demand instead of just a China demand. I guess the other risk is more geopolitical when it comes to de-risking. US-China geopolitics, disagreement on auditing requirements and information sharing. So I think they did put it out there that if they fail sort of to provide auditors working paper to the US for 3 consecutive years, they might have to delist from the US. So that's about 2024. I think they were also talking about exploring to list on Hong Kong Stock Exchange. And as far as we know, I think for the US-China delisting kind of discussion, there were quite a bit of progress in Q4 last year, where some of the internet companies have already submitted papers for the SEC to self-audit. So I think this is really a wait and see what's going on next. Previously, when we did the modeling, I think we were looking at 137 for 2-year price target. The current price is 44.52, which is why we think it's a decent price to enter. But that said, they are reviewing their annual report for 2022 in 2 days' time. So I think we'll monitor that report first, and then once there's no everything is good, there isn't a red flag per se, then we'll likely make the buy over the next week or so. Yeah, I think that's all. Any questions? If not, thank you.
Thanks, guys. Just a few administrative reminders. So as Chayang has mentioned earlier, for your cash positions, if it's more than 50%, then it will be cut by half. But if it's for strategic reasons, then do let us know as well. Another reminder is for the initial memo. So I think Chayang and I have personally reminded everyone. So if you all require any assistance for mentors, do let us know as well. And for the monthly portfolio update presentations, moving forward, portfolio managers do send us the Word document versions. Yep, that's about it. Chayang, anything to add?
I think nope. Yeah. So thanks guys for joining.
Yep, all the best for your midterms and finals, Chayu. Thank you. Bye-bye.